Hello, everyone. This is Jim Hiles at First Capital and Gold Plan 101. Today is December 27th. This is going to be the last market Monday for the year, if you can imagine that. And hope you all had a good Christmas break. We're coming up on New Year's, so shortened week, actually 2 weeks in a row here. If you're on vacation, I hope you're enjoying it. A lot of folks are kind of stuck at home. We being one of those, not because we're sick or anything, but because it seems to be we're trying to get out on air flights someplace and you can't get out. So we'll be here. So one kid's at home, the other's out skiing. So good for him. In terms of the market, we've had a pretty decent week, and it's just been a rebound type of week. The Santa Claus rally is taking place as we speak and should continue through the end of the year, as far as we can tell. It's pretty light volume, so it's hard to put any major emphasis in the market. But this tends to be a good time, and usually as we reallocate after 12/31, the reallocations to stocks get moved around. More money comes into the market as well, as people look at their year-end results and move into things they're comfortable with. From the variant standpoint, Omicron's still out here. It is pretty severe here in the Northeast. It looks like we're combating it. We don't have enough tests. It's $20 to go to CVS to buy it if they have it. So kind of ridiculous on that. Most people are sort of going back into shelter it, if you will, which is probably fine. Going forward, when you look at the economy, sector outlook looks pretty good. Energy, communication services, information technology, and healthcare. Those are what the analysts like. Not so much in staples, utilities, financials, and real estate. Now, this is an analyst consensus view. Doesn't necessarily reflect our current view, but we're going to have probably done next week, a video coming out with 2022, kind of a compilation forecast outlook. It's always fun to make predictions because you know they're not going to come true, but we'll take a shot at it because people are asking us for it, so why not? We did have a decent growth adjustment in the economy. It actually was up a little bit more, which what we certainly want to see more of this. Spending slowdown, hard to say exactly what it's for. Some say it's because they spent money. The economists say that the consumers spent money early to get their gifts. Fine. Build back better seems to be build back later. Hopefully that's the case. We would love to see this thing get deferred all the way out to the midterm elections, but we'll see what happens with that. It's fairly quiet. So as we go into the new year, I want to wish you and all of yours a happy, healthy, prosperous new year. We do expect a positive year, although it's probably going to be a lot more difficult than it was in 2021 to get these kinds of rates of return to continue. It's just not normal. So we would expect more of an average year, if you can imagine that. Average being maybe 8 to 10% in the markets, but upside still is here. Rates will continue to probably threaten to go up, but as long as people are insecure about the future, that 10-year treasury doesn't seem to want to come off 1.5%. So we'll see what happens as we go ahead. And I'm sure there's going to be a lot to talk about. So have a happy new year. We'll talk to you soon. Thanks. Bye.